Can you really buy a house with Bitcoin? There are trillions of dollars locked in the crypto market, held by millions of Americans. But the truth is, the real estate system is not designed to handle digital wealth. But to find out what happens when you actually try, I sat down with an Ohio home buyer and podcaster who attempted it. What he ran into shows why the housing market feels so frozen. I think you're really going to enjoy my interview with Ohio resident and podcaster Matt Diemer. All right, Matt, how you doing today? Welcome to the Housing Nerd.
What's up, man? Hey, very nice to be here. I've been watching you for quite some time, doing a good job. Thanks for having me.
Pleasure's all mine. I think you have a very interesting story that the Housing Nerds are really going to enjoy. So let's get into it, and if you can, just give me a quick overview of who you are, kind of, what you're about, what you do, and then we can get into the meat of the interview regarding Bitcoin and real estate.
Yeah, absolutely. My name is Matt Diemer. I am a two-time congressional candidate. I bought my home with Bitcoin. I do a podcast. I've been doing podcasts in the crypto Bitcoin space since 2017, and wrote a couple books about it. Trying to get people onboarded into it, and have been, just reporting on that space or this space for, like I said, almost the past decade.
Excellent. Yeah. So obviously, I'm not an expert on Bitcoin. I'm not an expert on crypto. So I'm really excited to learn more about it from you. But let's talk about your property and the fact that I think what made me really interested in your story is the fact that you, if I understand you right, I'm sure you're going to explain this, you purchased your house using cryptocurrency. And I don't know anybody who has done this. So we want to hear the story. How did you do that? Take us through it.
Well, see, then that's the issue is I did not purchase it with cryptocurrency. And that's actually what I really wanted to talk to you about is the disconnect between the cryptocurrency market, the way it's perceived by realtors, people who own their home and trying to sell it, and what you have to do as somebody who might have your wealth or what you're going to purchase a home with in a cryptocurrency. And so that's the disconnect that I find is interesting. And I think that there's two things that we can do here. Number one is figure out how realtors can maybe be more educated on that issue. And number two is maybe move the industry forward, the real estate industry and the crypto industry forward, to make a easier process to make that transaction. But there wasn't a, say, crypto to home seller transaction. That was the actual issue of the whole thing.
Okay. So tell us more about that.
So there's a couple steps that I just really wanted to point out to everybody is that the first one is the proof of funds. And people know that you have to, when you buy a home, you make an offer for the home, you put down earnest money, which is always going to be a cash deposit into an escrow, which I think for this purchase, I put down 20 grand. So it wasn't a little bit of money. It was in my opinion, a substantial sum of money to say, hey, I'm serious about this. But then between that and the commitment and, the purchase, where there's a lot of stuff, the little hiccups along the way that allowed me to take on more risk than the average person. So, and Housing Nerd, please let me know if you can clarify me on the process. But when you go to buy a house, you look for a house, you get a house that's assessed and evaluated for a certain cost. Your bank's going to approve a loan. The bank then has the money there. The bank tells you you do have the money. You then show that to the realtor, and then they say, oh, you have the money to buy this home. You make the offer, and then the money gets transferred, or at least to an escrow, to title, and then to the individuals. That's pretty much correct. In a big general.
In a nutshell.
In this aspect, I have the asset that is going to be transferred, and I don't have a way to prove funds. So what you can do is if you have it in an exchange, if you have it in a wallet, if you have it in those kind of aspects, you can take screenshots. And what one thing I know realtors might want to say is, we need your name. Well, sometimes you just don't have your name unless it's on an exchange, or if it's in a wallet, you don't have your name. So how do you prove that it's your fund? So therefore, you have to make a transfer to a place where you can have a name, then a screenshot. Now they're wondering if the screenshots are doctored. So you have to prove to them that it is actually your screenshot. Now, on the exchanges like Coinbase, Kraken, Gemini, and these other US exchanges, there is no download of a PDF or a letter of confirmation that you actually hold these funds, enough funds to make a deposit on a house. or whatever.
Hmm.
And so therefore you have to have talk to your realtor to advocate for yourself to the sellers and the other realtors that this is a legitimate asset or a legitimate holding of somebody, that you have enough money to do the transaction. So now that we have another balance here, and please interrupt me if there's any questions that you have from this. So now you have a couple of things. If you're going to take out a loan based off of the assets, it's just been recently in the past couple months where banks are now are able to look at your crypto holdings as a tangible asset that they can leverage for loans for real estates or cars or houses or what have you. Before that, it wasn't. So when I bought the house, it wasn't, even as far back as only 4 months ago. So so that's one thing, is getting a loan with that is almost impossible, or if that's not impossible. The other one is now you have to have this. You have to advocate with the realtor to say that this is legitimate. So now what I ran into is the skepticism. And this is where I think the real estate realtors should come in and have to understand like what this is about. Is one, these exchanges don't have actual proof of funds where you download it and it's legitimate, it's signed off by a U.S. government or FDIC backing or some kind of federal backing. Then what you need to do is you need to sell. What they made me do is sell the crypto to put into a bank account to then have legitimate proof of funds. So why I found this to be a pain point is that is a taxable event.
Right. Yeah. Capital gain tax on that, right? Because you're selling your holdings. So let me back up a second and understand this. So I've never experienced this before. So you've got, it wasn't like a Bitcoin to Bitcoin transfer to buy the house from somebody, right? Okay. Mm-hmm. But it makes sense in what you're doing. So did you get a loan for the house, or is it all like? It was
Bitcoin. It was cash. Yes, it was
right.
cash.
But the transaction was transferred. Like it wasn't like you didn't put 20% down and the bank fund the rest. You funded the entire thing with basically cash coming through a title company, right?
Yes, absolutely.
Okay. Okay. So, but you're saying that, and I had no idea this was even the case, but these crypto exchanges, you can't go in like with Huntington Bank, right? And say, hey, here's my, or Edward Jones and say, here's my statement showing that I've got whatever dollars in my investment account with my name. And you can call my Edward Jones guy and confirm all that. You're saying with the Coinbase, the crypto exchanges, none of that type of proof is available.
Exactly. None of that type of proof is available at this point. Now, of course, there's other financial instruments you could use, like a Bitcoin ETF that they have from, Fidelity or, whatever.
Right.
But that is just if you're not having direct exposure to the asset, just like gold ETFs or, an indice of any company or group of companies for any kind of industry. So the issue then becomes is that you are taking on a lot of risk, because if you want to show proof of funds in a traditional bank, then you have to create a tax event. So if you're buying, let's just call it the national average. What is it? $458,000 is the national average of a house. Let's just call it $500,000 for a house, depending where you're listening to this. You are now on the hook to the U.S. government anywhere between $85,000 and $130,000. Without even owning your home. And so that is one of the things that I think was a very big pain point between a digital asset like Bitcoin to trying to buy the home, is the skepticism and the lack of, regulatory clarity between that process that allows you to make a tax event without even owning your home. Now, the reason why I brought up the earnest money is because regardless of that being there, and they could take just 20 grand from me and say, you know what, they could just say this is not satisfying, and they can pull out, or they can not sell, or we not close on it. Or if I back out myself, I could lose my $20,000. That didn't even come into question about this. This was more of you have to prove yourself, and I thought that was very interesting of a process and very, very hard to do.
Okay. Yeah. So you're saying just negotiating with the seller, and saying, hey, here's my offer. Here's what I want to do. And the other side looking at it going, this is Greek to us. This isn't normal. We don't know how to treat this. Is that what you're saying?
Exactly. So the burden of proof was on me, the purchaser, through this whole process. And again, I just want to stress that the tax event was substantial. for a hope to purchase something. And the reason that you're going to, and a lot of people reason why they're going to keep their, for most people, they'll say, well, if you're going to buy something, just turn it into cash and then buy it. But I think for an investor, you wouldn't sell your home to get cash to buy another home because of, obviously, is it a 1031 or is it 1099? 1031, right?
Well, a 1031 if it's a second or an investment house, but on your primary home, you can't do that, obviously.
Exactly. So you could do a 1031. So you would never do that. You would go real estate to real estate or asset to asset. Or you would also, or you wouldn't sell gold to do this. You would want people to evaluate your gold as a certain price and then, allow you to make that transfer. And that none of that exists in the crypto market. So there's a huge, I guess, like I said, pain point within this market. And I think that we're going to have to figure this out very soon because I think there's a lot of cash in that asset that is going to have to move in one way or the other.
Correct me if I'm wrong, but even if you sold, let's say you prove yourself to the seller and they're like, yeah, this all makes sense. This checks out. We accept your offer, Matt. When you go to buy the property and actually close, regardless, you're still going to have to sell your asset in order to buy the next one to have that cash, right? So are you saying that you think there has to be a process in place, or you envision that a process will be invented where you don't have to sell the Bitcoin and take the capital gain hit in order to actually purchase it? Forget just being accepted by the seller. You actually have to. You're saying that you think maybe there's a way, or what's coming in the future is, well, we're just gonna not sell my Bitcoin, leave it as Bitcoin. Is that what you're getting to?
That is exactly where I'm getting to. I think that in the future, there's things that we have to figure out. The digital assets are coming. If it's in a form of a stable coin or some kind of digital national currency, if it's in form of digital assets or even digitalized or tokenized stocks, which is something that even banks like Chase or companies like BlackRock are very much invested in and experimenting with, is that we're going to have to figure out what digital assets mean to traditional finance, and especially when it comes to real estate home purchases. And so there's three things that we have to really understand. Number one is, how do we use those as proof of funds? Number two is, how do we make that transfer as an asset to a purchase, especially if it has a monetary value, and it's able to do that in a very frictionless manner, and hopefully not without capital gains. Maybe you can roll those capital gains over into push them off to the future, just like a 1031. And the other one is exactly what you said, is to figure out how to I guess validate that purchase and the value of that asset. So you have those three levels that aren't even there right now, but they are coming, in my opinion. And so now the question is, from you as a realtor, how do you take a digital asset to purchase a home in? And if you can't cash it out into it, if you don't want to cash it out into a taxable event or US dollars to make that, remember, it's a risk. As you said, yes, I did have to cash it out if I was going to purchase it, but you don't want to cash it out and make a taxable event if you might purchase something.
Right. No, I completely get that. And your analogy with buying a home, like you wouldn't, if you were an investor and you're selling your rental property to buy another rental property. And by the way, folks, the viewers, this is not tax advice. We're not, at least I'm not a tax expert or an accountant or a lawyer or anything like that. We're just two folks that are BSing about the possibilities in crypto and real estate. So, but I do know that if you're selling your rental property, you would not want to sell it and pay the capital gain just with a chance that you're going to buy that next one. And so with the 1031 exchange that they have in place, these rules in real estate is probably one of the biggest loopholes in real estate that exist. You can take those capital gains that you would be hit with on the rental property, defer them in the future. They don't vanish. They just are deferred into the future. And so when you buy that more expensive rental property, you can roll any of the capital gain into the future and not have to pay it at closing. But no investor on real estate would ever say, well, I'm going to sell my property just with the hopes that I'm going to buy another one. Is that right? Is that what you're saying?
Exactly. And so we have that disconnect within the crypto or digital asset industry right now. And I think that it's a loophole that needs to be, I guess a deficit that needs to be fixed. And again, I want to. I know, but a lot of people will be like, "Oh, well, the rich are going to get richer." Well, I mean, there's other ways you can figure that out. Is what's your net worth? Is it under $1 million or under 5 million or whatever the price is or the net worth is? Maybe people for under this can defer it once or defer it once in your life up to $1 million or up to a certain part of home. There's ways to figure this out that it doesn't look like the rich are just going to get richer. And I understand people are saying like, well, if you have $1 billion of Bitcoin and you just want to transfer it and buy buildings and houses and land, then it's just you're a 1031 of asset to asset. I get that issue, but there has to be a way that we have this huge hole. And just like you said, nobody in the real estate industry is going to sell their property to hold cash on the hopes they get a property in the future.
Yeah, and it's different than it is with stocks because again, I've worked with a lot of sellers and buyers where their proof of funds is their investment account. Exactly. And it could be with Fidelity or Edward Jones, and they just print a copy of it. They black out their information, their sensitive info, and that represents the proof of funds. And so it's easy to do. But with crypto, I never had the experience of this is very educational. So I mean, it would seem like there are now and in the future maybe enough people invested in crypto where their net worth is heavy into crypto. And if there was some way to unlock that money that would make it easy from a transaction with real estate, you could free up a lot of market movement, unstick some of the market just from freeing that possibility up. Maybe not for as many boomers and Gen X like me, but certainly for younger folks and the future of the housing market. So that's that's really interesting. I mean, at the end of the day, though, so my argument would be, or my big like, what about this moment? If you're selling a stock to buy a house where it's transacted in cash at closing, you still have to sell your stock and pay that capital gain, though. So it's very. I mean, so why wouldn't that apply to crypto? Does that make sense? My question, or like?
Oh yeah, 100%. That totally makes sense. I think that we are, and this goes to something we're talking about off air is real estate versus Bitcoin investments or crypto investments, and which one's better. And I think that what we have here is we have the housing market stacked as a has a couple of unfair advantages, which we thought were going to be for the empowerment of the mom and pop, the small families to buy a starter home to upgrade to the next home. But what we're talking about now is real estate to be used as investment property. And people are looking at real estate as investments. You buy a home to see number go up, not to raise a family or even their equally as a weighted value. When it comes to when you're purchasing. And so my question is if you are and again, this is why I think the limits were come in net worth under, let's just call it, 5 million or something. Why can't you take your stocks or your crypto or your digital assets or your gold and use that for a 1031 exchange when we are in a market where we are trying to encourage newer home buyers or home buyers that, if you're a younger millennial or even coming in Gen Z, a lot of them are in the tech industry. A lot of them get stock options. A lot of them get, different compensations, just a compact of a salary. You have compensation within equities and so on and so forth. IPOs happen and your net worth is tied up into those valuations. If we're trying to encourage, and the average age of a home buyer now is upward near 40 years old, and we're trying to encourage people to buy homes, why don't we take all possible avenues to figure out how to get people to get into the real estate market, considering the real estate market is the biggest market in the United States?
Great question. It's I don't hear anybody talking about this. There's probably a lot of net worth wrapped up into unrealized gains, right? And to unlock that in a easy way would probably free up the market. And I got to think even if you could take like your IRA or your Roth IRA, right? Whatever, your 401k, anything like that, or you're just your investment. Like maybe somebody has been buying SPY over the past decade, and they're like, you know what? I started with $100,000 and I've been adding to it. Now I got 7 figures in here, but I don't want to sell any of it because I'm going to owe tax on $500,000 of it. And to buy a house would make no sense. And that's where all my cash is. So to your point, yeah, you give them some kind of, I guess what you're saying, Matt, is there's already loopholes for real estate investors. Why can't there be loopholes for mom and pop?
And exactly. First of
right?
all, I'm 100% for mom and pops, to get into any markets, and so that's where an incentive is. But the other thing is, and I think that when I saw this friction of myself trying to get into the real estate market and own a home, is I saw like, well, if I owned a rental and I just put it over, I could defer those capital gains, and I can defer it in other ways, or if I could build wealth that way. But the way that I happened to have a little bit of money to purchase a home, I am now getting kind of penalized. So I guess the question is, how do you crack into capital to incentivize people to go into the real estate market, which everybody needs to own a home? And you have a great point. What about the IRAs? What about the 401ks? What about the stocks that you hold for maybe some sort of compensation? And what you have now is you have a system that incentivizes trust funds or future planning or giving or holding your wealth until death, and then having some kind of raised base cost bases up after you die, instead of taking that capital and injecting it into a real estate market or a market that can help families right now when it comes to, let's say, real estate. And so I would say that unlocking that capital for first home purchases, even at the very least, but just real estate purchases in general, if your net worth is under a certain amount, I think would be an amazing benefit for the average family.
Yeah, it probably would be. I think you're on.
Not to mention the market in general. Not only you have the home purchase, you have the lock in of capital gains, which once you buy the house, even if it's a 1099, is deferred. So you're going to get that. You're just not going to die with it. You're not going to trust fund it. It's not going to get a raising cost basis. And then you have local property taxes that are going to be paid because you own the home.
Right. Yeah, and it frees up that. It makes the market frees it up, right? It starts moving. People are buying and selling, and it gives the average person an opportunity. I've never thought of this idea before. I've never talked to anybody who's gone through this like you have. So like if you're one of the things, I guess, thinking back to a couple of days ago, I had somebody on my channel. My mind's going in 1,000 different directions because this is unique. I had somebody say on my channel, hey, they made a comment that maybe one of the reasons why there aren't more homes on the market is because a lot of investors, real estate investors, do not want to list their home that could be a home for a first-time home buyer, not because they don't necessarily want to buy anything else, but also because they don't want to pay the capital gain, because home prices have gone up so fast that if they bought a single family house 15 years ago and now they're like, you know what, I don't want my rental anymore. They're like, well, it would be suicide to sell this thing, even if I kind of want to, because the capital gain would be insane unless I buy something else. Oh, by the way, nothing makes sense to invest in as far as real estate, maybe where they live. So they're like, well, I'm just stuck. I got to keep it. So that house never hits the market. And they're kind of just beholden to the system. They're like, well, I'm going to get a massive tax bill. I'm not going to sell it. And so I hadn't thought of that either, that there's probably a lot of disincentive for investors to sell because they don't want to pay the capital gain. And what occurred to me was, my wife and I just had this conversation. A few of our rentals, I was like, you know what? They're not doing that well. They're not amazing. You know, we could take some cash and put it over here into this property or buy something else. Maybe I was like, well, we would get slammed with capital gain tax. So let's not do it. Yeah.
No, that's a very good point, because I mean, the math just doesn't math. I mean, it's not even just a capital gain tax. I mean, luckily you're a realtor, and you could do your own work. But if you're looking from the buyer's side, that's not a realtor, you're talking 6% on top of that for your realtor fees, unless you negotiate something better, 3% each side. So roughly, you know what I'm saying? And with other fees included with that, not talking about any other hits, your capital gains and other hits. So, I mean, I think a lot of people really don't understand, with all of that coming out of and the math doesn't math with this as well. Because remember, you're paying capital gains taxes on the total of your property. So let's just go back to the $500,000 property. Your capital gain taxes are on your capital gain taxes are on the profit of the profit. Your real estate fees are on the total of the property. So 6% on $500,000 is not 20% on $100,000. So now we're talking about your profit, which is $100,000, now is down to 80. Now is down to 6% on $500,000, which is now, what is 6% on 60 grand? No, I don't even know how much that is. How much is that? We're talking about, anyway, yeah, exactly. So now your 80 is down to $30,000 profit, and it's like, what does that even mean anymore?
Yeah. No, there's a lot of hidden fees with real estate that people don't understand. Um, yeah, they're just it's not cheap. It's not cheap to sell. So I wonder, is there a way in the future? Do you envision somebody just transferring Bitcoin to a seller? Like here, we agree on this price. I'm transferring my Bitcoin at closing to you, and that's it. Like that's how you're paid.
No, I
Oh,
don't
okay.
actually. And I think that just following the market, I don't want to go too in the weeds with it, but there is a lot of companies and a lot of legislation coming out right now to make digital assets and on-chain, meaning on the blockchain, on a blockchain digital asset transfer more institutional. And so things like stable coins are going to come out. So I do feel that if somebody would make a transfer from Bitcoin, say, to a title company, it would probably go from Bitcoin to a stable coin. And so for your audience, what a stable coin is a digital representation of a dollar. So these companies like Tether and Circle have different stable coins called USDT and USDC. Actually, Circle's USDC and Tether's USDT. And you have to have either a physical dollar or a dollar equivalent, like a US Treasury bond, backing that dollar. And so they make once you get that dollar, they make a digital representation. And what I would envision is Bitcoin to a stable coin or a holding company, like maybe even Chase Bank or something, that would then convert it into a digital asset and then put that over into a holding company, because I think stable coins will be the digital asset that we'll be using in the future for most transactions.
Okay. Yeah, I don't want to get into the weeds either, but I'm curious about as I think about that though, like, isn't that just like, I mean, you're still selling the Bitcoin, right? Or converting it. So there would still be like a conversion that could be taxable, right? At that point.
The fact is you can't get away from death or taxes. So I think anybody can figure out how to have this a tax free. Even if you're going Bitcoin from one person to the other, it will be a taxable event. It's a taxable event. You only can gift up to $15,000, or is it $18,000 or something like that a year for gifts. That's per person per year. So even if you were trying to buy a house with that, you'd have to do that for quite some time to get away from the taxes. Which actually might be a good idea. So you're going to have to pay taxes regardless if you're cashing out an asset. And so there's no way around it.
Yeah.
And that's why I think we're talking about right now is how do we defer those taxes to allow that capital to come out? Because again, one of the biggest conversations is boomers hold, what is it, $49 trillion of assets right now. And we're trying to figure out what's going to happen when they pass. Is it going to go to the Gen X millennials? How is it going to be distributed? And what's going to be the tax events and who's going to have that influx of wealth? And now could we have been freeing it up this whole time instead of it just being sitting there in on IRAs, 401ks, trust funds, and so on and so forth, and allowing that capital to flow. And I think that we really have to figure out how to figure out more equitable ways of capital flow, especially in the real estate market.
Yeah, understood. Yeah, absolutely. I think the more creative opportunities for people to unlock their money and their resources, the better. And this goes into the fact that there's a ton of loans out there that are rock bottom interest rates, right? Assumable loans may be one of the most difficult processes to go through from a real estate transaction end. It's just very challenging to assume a loan, and it takes forever. I mean, I've been in transactions where it takes 8 months, and I've been in transactions where they say it's going to take a year. And you're like, well, there's no seller on earth that's going to wait that long. And you'd have to have a very unique seller and buyer. So there's these opportunities where there's resources and assets that are locked up either with lower rates or crypto or IRAs or whatever. You unlock those and you give people an opportunity to move forward and do something versus just being in a frozen market and doing it like we've always done it.
You know, Bill Pulte actually brought up a good idea. I don't know if you talked about this on the show, is the carryover loan rate. Mm-hmm. And I thought that was a very great idea. And one of the problems that we're seeing right now in the real estate industry, and again, why you probably don't see assets coming out, Bitcoin or any other Ethereum, anything cryptocurrency. Also, you're going to see things like Tesla stocks and Nvidia. I mean, people have been made million to billionaires because of the rise of that $4 trillion behemoth company, Nvidia. Even though they lost a lot of money the past couple of days, they're still the biggest company in the world overnight, create a lot of wealth. And one thing you probably spoke on this show is you have these COVID real estate loan rates of 2.3%, 2.7, 3.1% that people don't want to get out of. But what if you can carry that over to a new home purchase? How do you unlock that? If I can roll that over plus have a 1031 and figure out how I can upgrade my home, you'll see housing stock go up. And it's without having to drop the rates and go into quantitative easing, which could cause and fuel further inflation across the board. I mean, honestly, I think that's a brilliant idea as well.
Yeah, I like that idea. I thought, okay, somebody actually they put their thinking cap on for that day. The 2 days before that, the 50-year mortgage idea was horrible, obviously.
Horrible.
In 99% of the situations, it wouldn't probably make a lot of sense for people. But the portable mortgage idea would be, I talked to somebody, actually interviewed a mortgage expert yesterday who was saying that he thought maybe it would be very complicated to actually execute, because they were like, well, who's going to, are you going to transfer just the debt that you have on the current house? Or are you going to get the new loan with that rate? And he just thought the execution of it may be difficult, but he also agreed that it would be probably it has some opportunity to be a good solution for the housing market, because you're right, Matt. It's like everything's locked up, and anything they do to try to bring down rates, if it's not over time and just natural, is going to probably be quantitative easing, right? And I mean, right now they're not buying mortgage-backed securities; they're just buying treasuries. But who knows, right? Like, I think they're prepping for a bailout of either home builders, car market, the auto market situation, or it could be the housing market in the future, or it could be something we're not even thinking of. It could be the property tax problem. But I think they're priming the pumps for it could be the AI bubble, right? I think they're prepping the pumps, they're priming them for for a round of doing something to give people to bail people out. It seems like that's what they're doing.
That's interesting. One thing I looked at today, actually just today, is somebody made a comment on my show that a $69,000 Bitcoin back in 2021 is the same as $83,000 Bitcoin today. And I was like, that's absurd. But with inflation as it is, at something a little bit over 17, real inflation at 17%, but we're talking about like real inflation, real inflation. That's 100% accurate and to the dot and to the number. And so I think a lot of the things that people aren't realizing right now is what inflation did to the housing market, the overall quality of life for Americans over the past 5 years. And when we're talking about lowering rates, and I do want to say that even though I want to see a number go up in the stock market, even though it's pretty hot right now, Jerome Powell is doing an excellent job fighting the sentiment that we need lower rates to stop that quantitative easing, and knowing that we are up 20% since 2021 across the market. And that's not even talking about real estate, because real estate, as you know, and I've been watching you, it's up way more than that.
It is. Yeah. In some markets in central Ohio, there are neighborhoods that are up 110% in 5 years. Across the board, it's like, I think nationally, it's like 45.6. And the weird thing is that's starting to compress. And as we go down the road, when you go back 5 years, I think that number is going to continue to shrink into a number that is a lot more normal. But it literally, in most areas, Matt, it's between 2020 and the middle of 2022. That's where all the price gain happened almost. In those 2 years, some areas are like, we're up 30% in 1 year, 25% the next year. Then they're up like 2%, down 1%, up 1.5% since then. So it's like, we got a decade of appreciation in 2 years, right? Yeah. So the other thing that just occurred to me is, what about all the gold out there? Like you just talked about Bitcoin being which is a great point. You look at inflation and you're like would you say $69,000 Bitcoin back then is equal in 2021 is now equal 83,000. Is that what you said?
Yeah.
So look at gold. I had ChatGPT when I was driving down the road a couple of days ago, run an analysis for me. Like, hey, what about gold? Like somebody bought gold at $2,000 an ounce. Now it's worth 4,000 an ounce or whatever, 4,400, whatever it is today. Oh, how much have homes appreciated since then? Gold has completely outpaced that. The boomers who have, and not just boomers, but a lot of people that have all this gold stashed away, giving them a chance to unlock that to buy a house would be pretty cool. Yeah. And you're saying not to avoid capital gain, but just defer it like they do on a 1031.
Exactly. And so what we're doing is I think the question what we have in America right now is home affordability, who has access, the price of first-time home buyers now getting into the upper 30s, early 40s, and what are we doing to try to figure that out? Now, if we can have a way to balance that out and where we can unlock, different non-taxable asset transfers and make it smart. Like, hey, yeah, you can buy a home for your kid. You can gift it to your kid. You can take your trust and allow to liquidate it early if it's in real estate or if it's in something that, we are having an absolute obvious issue. Like you said, there's places around the United States that's up 110% in those 2 years of 2020 to 2022. Like, that is something that we really have to take seriously and make some really serious and fast decisions on. And I don't see why we can't figure out how to unlock this liquidity. And gold's a $22 trillion asset that is just waiting to get unlocked.
Wow. Yeah, I don't hear anybody talking about this with especially with unlocking different assets beyond, just beyond the normal solutions of lower prices or more supply or whatever. Because the fact is the markets throughout Ohio, throughout the Northeast, even I look at them every day in different areas of the US, markets where you hear the headlines going, oh, it's really like prices are falling there. There's a lot more supply. But inside those larger counties or metros, there are zip codes where there's no supply. And we're not building a lot of homes. The home builders are taking their foot off the gas. And in some areas, they're just not building. Like the Northeast, many areas in Ohio, home builders are just not present. And so there's like no hope to get more supply unless somebody has a reason to sell their property and buy something else. But there's no affordable supply, right? There's nothing that's in the lower price range. When I looked at New Jersey a couple weeks ago, it was only like, I think 15 out of their 750 zip codes had more supply than 2019. So there's just nothing on the market. And so that reason, and then prices aren't going to come down because there's no competition out there for homes. So let's talk for a second about Bitcoin or crypto versus real estate. Like, people have asked me, what's a better investment, crypto or real estate? How do you answer that, or what's your thought process there?
Well, it's a really hard case to make that crypto would be a better investment, since we just talked about the inflation rate and $69,000 Bitcoins at $83,000 Bitcoin today, even though Bitcoin's sitting at around 83 right now. So it really didn't move in terms of inflation since 2021, and your home price did. I would say that before 2020, and correct me if I'm wrong here, homes usually followed pretty much inflation. And so if you sat on a home for, maybe 10 years or 20 years, a 4% year over year return on that home is pretty in line of what inflation would be. And I haven't seen markets move much above that unless it's a hot market that's growing, say Charlotte or, Asheville or something like that. Where you really get some outsized growth. Austin, Texas is something that maybe was crazy there for a while, but that was also COVID. The problem I personally think, and again, I would love your opinion, is why are we thinking we have a conflicting thought here when it comes to home prices. This is homes and what they're used for. Homes are supposed to be places where people can raise families, upgrade to bigger homes because they have a bigger family, or they need more space, or downgrade when they get older because they want that first floor master with the washer and dryer on the first floor ranch. Because they can't do the steps anymore, or don't want to do the steps anymore. So this is what homes used to be. But now we're talking about homes as an investment, because most people's net worth, if they do have a net worth, and that's sadly that if they do have net worth, most of that net worth is locked up into their home with the equity from paying off their home. And so is a home an investment, or is it a security, a type of security where you can live in to raise a family? And I think that we've got it far away from. So now we have a conflicting conversation that we're having, right? The people who own a home and saw 2020 to 2025, now the rise in prices are going like, oh, now I'm worth $500,000 because my home is now worth $500,000. Obviously, the state wants it to be worth $500,000 because they're going to pay taxes of unrealized capital gains, and they're going to get you on that. I have a whole rant about that, by the way, which I think is totally immoral and should be totally illegal. So they want your price to be up. You want your price to be up. Yet the same conversation, we are saying we need to have increased housing stock to get prices down so that we can have younger buyers to come in there. And so we have this complete dichotomy of conflict of, or this complete conflict of interest within the same conversation. So I personally do not believe real estate should be looked at as the same way as a speculative asset as Bitcoin, which is a heavy risk on asset that's speculative. Still, even though I think that it is a great asset to own, it is speculative. It is a risky asset, opposed to say something like an S&P 500 or the NASDAQ 100. And so I would even put it in the same category. And I think that the United States should really have a good conversation, and all of us, especially here in Ohio Housing Nerd and all your followers, have a conversation of what is a home really for. And we should really focus the housing stock and our incentives when it comes to freeing up assets, like we talked about, when it comes to the mortgage prices, the interest rates for the mortgages, to reflect what we think a home should be. And if that's for a right to housing, for starter families, for families to move in, for you to raise kids and create good communities, then we should really focus that way.
When you think about just the question if it should be an investment or just somewhere to live, over the last 5 years, or really before that, even maybe the last 7, 8 years, or since I've been doing real estate, it's been more of an investment type attitude, except it got a lot more accelerated during the last 5 years when COVID hit, that the average home buyer who was going to live in the house maybe for 10 years or 15 years is now thinking of it as a flip, instead of, well, if I move out in 2 years, it's going to be a loss. Like, that's traditionally how it's been, right? I have to stay in there for 15 years or 20 years for it to appreciate, me pay down the 30-year loan to get to a point where I'm actually going to walk away with money. But I've worked with people in the last 5 years where I shake my head that I can't believe the transaction that's occurring right now, where it's somebody bought in 2020 or 2021 and literally the next year turned around and wanted me to list the home. And I think, well, you're going to be underwater, right? And we talk about the price and I'm like, I think it's going to be here. And they're like, no, it's going to be way up here. And sure enough, they got it. And they're like, woo. And they think they're like a real estate mogul because they flipped their house. But I'm like, this is just dumb luck, right? At the end of the day, and it's fine. They took advantage of the situation. But before COVID, Matt, real estate investing, when I was doing it, was a very strategic, like, you had to be very pinpointed and strategic. You couldn't just buy anything, and patient. You had to buy the right property. And maybe on a flip here in Ohio, I would make, like, on a $150,000 home, I would make maybe 20 grand. And it's like, okay, I did my work. I put my energy in. I made $20,000 profit. I wasn't making 50 grand. It wasn't like you had to buy everything and you could just buy anything and the number just keeps going through the roof. And I think that's the change that's taken place. I believe that the market will correct itself. I think if we keep going, hopefully nothing happens where they lower rates too much, but if we keep going at a 1% growth, 2% growth, which is what we're seeing now in Ohio overall, then eventually I think it'll get back to that point where it's like, okay, there are real estate investors, landlords, flippers, but they're not just throwing stuff at a wall. It's very strategic. And if you're not strategic, you're going to get nailed and it's not going to work.
Yeah. Yeah. No, I agree. I agree with you. One thing that, our parents, I don't know about your parents, but my parents always would say is, like, you'll never lose money on a house. And that's really generally always been the case. Like, cause it did follow this kind of like inflation path. I remember our family bought a house in Bedford, Ohio. It was like 80 grand back in 92, 93 or something. I think it just sold for like 250 a couple years ago. I looked on Zillow, obviously. And if you just did the calculations back to the napkin math, it followed like a 4% inflation through that whole time. So it's still an $80,000 house just in 2023 money, So you never really lost money on the house, and that's how you would upgrade back in the day. But now we have this flipper mentality, these low rates, this whole, like, again, what you said, in the past 7 to 9 years of it looking like this investment. And I think that we have a distorted market. And now, without figuring out how to one, increase the capital flow into it, and how to incentivize builders to build and not restrict supply on the supply side. Also, I think that we have to talk about the YIMBY movement instead of the NIMBY movement, and rezoning a lot of these places that makes sense to builders and what they could build in these areas, and not having this NIMBY mentality. We can actually have housing prices that make sense for families and still investors at the same time, and getting back to like the patience and outlook for that, for buying a place. And that's actually one thing I did want to discuss here is, when I bought this place is it was a strategic move as well. We have the new Brown Stadium coming over here in Northeast Ohio, and that's a long-term play that I'm sitting on the edge of my seat risking to see if this house over here is going to yield something, because the Browns are going to be moving to Brook Park.
Yeah, but it doesn't sound like you bought it. I mean, it was a speculative play in a way, but it wasn't like that's the only reason you bought it, right? Or maybe it was.
No.
Okay.
No.
Yeah, it wasn't like you had to. Yeah, that has to work out for you to be able to like be solvent.
No. It was more of an icing on the cake, saying like, oh, this looks like a good place to live. I will live here. I will make this my long-term place. Also, this is happening right down the street. Let's see how this plays out. Maybe this might be a good region to be in at this point. Again,
yeah.
Is that the way to look? Is that the way to look at housing? I'm not too sure.
Well, I think if it's icing on the cake, I don't think there's anything wrong with that, right? If you buy in an area because you're like, you know what, even if you're a family and you're like, hey, we're going to move into the suburbs. If you do your homework and look at the area and say, all right, well, they're building a new school here. This particular employer is coming into the area, I think, in the next few years, or you just know from living there that area is developing, then that's icing on the cake. If something like a new stadium happens or a new development happens into an area that can be developed, it's like, all right, well, you made a smart decision, versus like their actual financial well-being hinging on that happening, right? And there are far too many investors in the last few years have purchased on things that may come, and if they don't come, their investment's not, their purchase is not going to work. They're going to be underwater for a long time, or they're going to lose everything. The Intel facility that's 10 minutes from me is a great example. I mean, and it happens with both investors and homeowners. People think investors, they're buying everything, but it's like, because house prices went up like they did, and everybody all of a sudden figured out, all right, for my primary home, I can maybe make a bunch of money on it. They're either not selling it or they're asking way too much. And so investors aren't even buying stuff. And the Intel facility is a great example. People, all of a sudden, as soon as that was announced, anybody within an hour radius of there was like, you know what? My house is now worth double, even if it's not. And so now it's the plant's still happening, but the fever of that has worn off. And, but the damage has been done, especially on the property tax end. So maybe we talk about that. You've got your stadium coming. A lot of people in Ohio aren't happy about that because of the fact that it's maybe they don't need it as the Brown Stadium. Maybe they need a winning team first. Easy for me to say as a Steelers fan, but wait,
Central Ohio and a Steelers fan? How does that even work?
Yeah, well, yeah. Maybe my contrarian attitude. And being a dome in Cleveland, that's completely cheesy. Like, you need to play outside. But what
traditionalists? I didn't know we had the conservative footballer in here. Is that your new YouTube channel? The conservative footballer?
I mean, I don't know.
Those damn helmets, like, what are they protecting their heads?
I mean, I don't know. Like, it feels more football-y to me, cold weather, right? And I get it, fans and the people that own the stadium and own the team want a nice fancy stadium. I get all that. I've been to their stadium now. It's fine. Like, I'm like, what's wrong with it, right? It's fine to me. But it looks like they're going to build it, or it's going to move forward. You mentioned property taxes, and you talk to me about that. Where do you think that's headed? We got these abolishment measures maybe happening in Ohio. We got these kind of reform things going on. They just passed something, I think, yesterday to try to band-aid some of the problems with property taxes. I think it's going to save us $700 million out of the $24 billion. That's what they say. So I don't know how much of a help that is. But talk to me about property taxes.
Well, there's two things there. Number one is this football stadium, which was being funded to the Haslams with $600 million from unclaimed funds. I don't know if people understand how that works. Is that when you say unclaimed funds is a pool of money that the state kind of helps you hold on to, that come from different things. Like, for example, if there's a class action lawsuit and everybody in Ohio gets a check because PUCO or First Energy did XYZ and they can't find you, and you have $1.75 that hasn't been cashed, it'll go into unclaimed funds. If you have a bank account that happened to close because the bank blah blah blah, and you had $22.50 in there, and they can't find you, that goes into unclaimed funds. And they say, well, Matt Diemer has 2250 from, Fifth Third or whatever, in unclaimed funds, and you can go get it, and they'll send you a check to get that stuff back. Well, what they did is in the legislature is they said, hey, you know what? We have all this money that's in here. Nobody's got it yet. They made it kind of difficult for people to find it. And so there's like 1.3 or something like that $1 billion just hanging out in unclaimed funds of Ohioan money. And they said, you know what, we're going to take $600 million and give it to the Haslams to build a stadium. That would piss me off. And that does piss me off, because that could go back to Ohioans and not for a football team and a billionaire's football team. Well, if you're a billionaire, you can build your own damn stadium, in my opinion. Whatchamacallit, the property taxes, on the other hand, I don't know what to say about property taxes. The property taxes are absolutely too damn high. And there is a measure to abolish property taxes. And I don't blame them, to be honest with you, because this is a very short-sightedness. And I think, honestly, an immoral stance of taxation and government. You are literally taxing unrealized gains. Basically, some assessor, some bureaucrat, some official comes and looks at your house and the comps in your house, in your neighborhood, and goes, oh, it's more money. We're going to make you pay for your house being worth more, even though you don't sell it, even though it doesn't go to your bank account, even though you don't do 1031 to some other house with that's worth more money, even though you've owned it for 30 years, it's now worth more money, and we're going to tax you on what we say, the mafia, we say it's worth. Which I think is absolutely immoral. And so some of these provisions that you're talking about and some of these ballot measures that's coming on there, I think are totally founded, because there should be a more equitable system I don't even want to use that word equitable. I don't like that word. Moral system. A moral system of taxation on housing. And what does unrealized capital gains mean? And I think that people don't realize that's what's happening right now when it comes to housing, because we're so used to property taxes and the way it's done here in Ohio, but they don't look at other places, how it's done, the problems that come with it, also the benefits. For example, and I can't remember if it's Florida or California. I think it's California. You pay the property tax of the house that you buy until you sell it, and you have that cost basis up after you sell it. So let's just say you're a boomer, and a lot of people get on the people in California that buy the house for, what they say, 7 raspberries, and they're still paying 1972 property tax prices, which also doesn't allow for the churn of the market to allow these older generations to sell their houses because the property taxes are so low. However, that is the fair value of your house, because you bought it for $100,000, even though it's worth $2 million now. You could sell it, but you did not. You bought a house for you to live in. So unrealized capital gains is basically somebody saying that you have this much, we're going to tax you on that much. And it's one of the conversations that we're having. And I think that people really should understand what that means when it comes to your bank account or anybody. It's used for billionaires a lot. They say, well, Elon Musk is worth, on paper, $400 billion. Well, it's on paper. We could talk about that's an extreme case. But what they're really doing is doing the unrealized capital gains on you. And it's kind of like just saying like, hey, you have a piece of art in your house that's worth 50 grand. We're going to charge you 8% Ohio sales or Cuyahoga County sales tax for it, because you own it, and it's 50 grand now. And that's kind of messed up, in my opinion. I would love to hear your thoughts on it, but I think that it's an immoral tax, and I think that we could do better to make it immoral. Last thing I would like to say, though, about the property tax thing is you saw, and I think that I think that is something that you probably witnessed more times than I witnessed, but I used to live in a place called Gordon Square up here in the Cleveland area, the west side of Cleveland. And it was one of those places where there was gentrification, and I'm putting that in air quotes. We can go into why I'm putting in air quotes in another time. But they were building those new condos and stuff like that, were next to houses that were, 80 to 100 years old. You had the babushka living in the house. That was paying that, bought it for, 12 grand back in the day, and now being reassessed for $300,000, and now having to pay for taxes on a $300,000 house in a high tax property tax city like Cleveland, because their taxes are high because everybody moved out of it. So they had to raise taxes, and now being priced out of their home. Totally immoral. So like with those different questions that we have of unrealized gains, of them coming in here to assess your taxes, of old elderly people who bought their house now being priced out, and developers coming in to build high-end luxury places to then reassess their area as a higher value, and then forcing people on Social Security to pay higher taxes and move out. How can you not justify going to the ballot and going to the polls to say we want to abolish property taxes?
Yeah, I'm with you. I can't blame anybody for thinking that. A lot of me thinks that the abolishment should take place just to shake up the system. The folks on my channel call it the scorched earth method. instead of trying to reform property taxes, just kill it and, just pull the pin, throw the grenade over the wall and let them deal with it. Because the politicians and the legislators are going to have to figure out how to replace the revenue. And you can tell they're scared. They're scared. They're like, we got to come up with some kind of measure. And I think with this reform they just put through, I think they're trying to appease the public. Like, look, we're doing something for you. It's like, yeah, that's not going to work. I think the train is already on the tracks going towards the station. Like the Ohioans and many Americans want property taxes removed. I think the issue is, Matt, that we're not thinking of what could occur if we do these things, right? Like if we remove property taxes completely, which I'm not saying we shouldn't do, but if it does happen, number one, you got to replace the revenue. Number two, there's going to be an increase in home prices and home values because people then, when they go to get their mortgage quote from their lender to buy the new house, will immediately qualify for another $500, $600, $700, maybe $1,000 a month. Right? They're going to go, well, yeah, your payment's only, $2,000 now instead of $2,500. You can go from a $400 to a $600,000 house, whatever. Right? And so they're going to go out and shop and say, well, I can buy a $600,000 house, or I can beat that other guy and outbid him on the $450,000 house because I know I can afford it payment wise. So I think that is something to think about. And I think the other part is, somebody brought this up on my channel a couple of days ago. A group I interviewed said, well, every corporation on earth will come in and try to buy real estate here. Every large investor will just come in and scoop up real estate if there's no property tax, because that's a huge expense to landlords, a huge expense. So they'll just say, well, I'm just going to come in and buy up hundreds of homes. I mean, immediately the return on investment would skyrocket for them. Now, with developers, a lot of the big ones already have abatements, so they don't have property tax right now. But for the large institutional home buyers, the large investors, even mom and pop investors, landlords, I think that they'll load into the market and drive up home prices, maybe to the point that the tax savings doesn't make any sense or doesn't help for that first-time home buyer. Those are just some things to think about. But I'm not saying that they'll happen or that, we shouldn't abolish property taxes. But when you say remove property taxes, it's like, all right, well, somehow that all has to work. The unrealized gain part is insane. Nobody would stand for them to come into the house, like you said, and look at the art and say, well, that piece of art or your gold in your vault or that you've buried in your backyard is now worth $4,400 an ounce. So Jason, you owe us capital gain on that, even though you haven't sold it. Nobody would stand for that. And then the other thing is, it's just unconstitutional, right? It's against the Constitution, and Ohio already ruled it was unconstitutional years ago, but the legislators just ignored it. So it's a mess. I'm not sure there are any solutions. There are probably just trade-offs, right?
I would say that we have to think about, first of all, I think there is more, there are solutions. And I do think that there are moral trade-offs or trade-offs that can make more sense to the people. I 100% think that there are. First things as I do want to say is that one part of the conversation though, that I think that the people were saying abolish taxes, local taxes. I'm an older person. I don't have any kids and I don't want to pay for the schools. They don't really understand how much your schools are actually a part of your property value. So that's a huge thing. Good schools equal better property value. Just stop. You have a good school. You look at the Bay Village, the Rocky Rivers over here in Northeast Ohio, Solon, Orange. They're great schools and they have great property values. So there's a correlation there that you cannot deny. And the people who are or benefiting that is for the older generation with the paid off house, and now they don't want the property taxes. Now that's going to be deferred to the younger generation with this whatever came out of the legislature, because it's about older people, their taxes, people who are on fixed incomes, and who's covering that? It's going to be the younger generation. So therefore, we're not solving that issue of how do we get younger people and younger families and people having kids thinking that they can afford kids into houses to raise those kids. We're just going to tax them more because any solution from Columbus now is going to hurt the people that actually should probably have a little bit of extra help getting into those houses. And that's why I'm talking about freeing up capital, maybe from the older generation to the younger generation. But there's two things that a couple other things that I want to say here is, number one is the tax abatement it's again, we're talking about places like Gordon Square that I brought up. The tax abatement for the luxury houses, and people who buy them have a tax abatement. They're paying $100-$200 a month for property taxes, while the person next door in the 80-year-old house on a fixed income is paying $500 to $600. That's what a tax abatement is. Again, immoral and probably unfounded, without some sort of correction there. The corporate, if you look at the chart, and I hope that you brought this up on your channel before, is there is a corporate down to a real estate up tax price here in Ohio, where corporate taxes went down and real estate taxes and property taxes went up to compensate for that. So we already had a circulation of funds in the tax market to say, hey, how do we subsidize businesses moving in here? Well, we put the burden on the home buyer to subsidize that. So they've already looked for the money. They just gave the money to the corporations moving in, which you do need jobs, you do need intel, you do need, that Palmer Luckey company that's moving in here. I can't remember the name of it that makes the drones over there in Columbus.
Oh, Adril.
Yeah, that's what it is. Yeah, Adril. That's coming in there. So we gave them tax incentives. Meanwhile, we were going to put it on the home buyers and the homeowners with unrealized capital gains. So that already happened. I think that should be reassessed. But the other thing is, I would say is, have you, and being the housing nerd you are, have you looked in the British system? And I'm wondering if the British system would work here. And they have in London, they have something called a leasehold and a freehold. In the leasehold is you leasehold your property. You still buy a house. It's still your house. You're still your whatever, but you're buying the rest of the leasehold. So your price of the house is determined by how long you have left on the leasehold, which the government holds the lease on the property. So let's say it's a 90-year leasehold. You still have 90 years left to have that house, or it's 60 years, or it's 100 years, or 200 years. Most people will only buy a house or an apartment if you have 200 years left on your leasehold. That means you have 200 years to own that property until you have to reassess if I can have that getting re-granted. Then there's a freehold where the property is outright yours, but the price of the property is way more expensive because you pay off the leasehold, you pay off your taxes, and now you own your property. So a 500,000 pound apartment with a leasehold could be maybe $1 million with a freehold, but the $1 million is yours. So I'm wondering if that's something we could do here. So let's just go to, say, Bay Village or wherever you are in Columbus area. You could say, hey, my house over here is $350,000 leasehold, and I pay taxes, well, for the rest of my life. But for $800,000, I can own that outright and never have to pay a cent.
Wow. No, I didn't know about that. That's a complete, that's way blue ocean there. At least for my, as far as I'm concerned. Yeah, it comes, I think a lot of it, Matt, is that the people on my channel, the comments I get, it's because it's from the average Ohioan. And they're like, look, once I buy something, I shouldn't have to continue to pay for it, like pay taxes on it, whatever it is. That's kind of their overall thinking. I believe there's a channel I follow. I don't know if you know this guy or not, The Uneducated Economist. He's just a guy out in Oregon that works at a lumber yard, but he talks about economic issues. And his theory, which I agree with, is we've gotten used to luxurious experiences. We have. And the luxuries, and he's a big believer in the Cantillon effect and how money flows from the top, goes to the top first, right? And then trickles down eventually to nothing for the bottom portion of people. And he's like, look, we've all gotten used to luxurious experiences. I mean, you know, everything you have, all the gadgets, you know, the nice football stadiums, right? Even for high school, right? Everybody's playing on turf. The weight rooms are state of the art, right? The schools are insane, right? And it's like, yeah, so it's like that, unless that stops, there's going to have to be a way to pay for all that luxurious experience, right? And so even at a school or city service level, when they're like, we're going to build this brand new, nice new park, we're going to redo the curbs, we're going to redo the lights, we're going to redo this and that. And it's like, all right, well, that has to come from somewhere. And I think the more of that happens, the more grift that's built that comes with the system. And that requires more funding. And so it's, there's probably a way to help the people that need it the most. But I think in order to do that, you're going to make there's going to be a group of people that have to fund that are going to feel cheated somehow, right? Whatever that is. It's a mess. It's not easy to figure out at all, but you're right. The unrealized gain, the fact that you are given a tax abatement to seemingly a wealthy person or a developer, but next door, those people are getting kicked out of their home and they haven't done anything except live there, right? That's all they've done is they've lived in their house for 50 years and all of a sudden their taxes are to the point they can't pay it. And now they're getting kicked out. I just looked it up yesterday. There's 105,000 tax delinquencies in Cuyahoga County. 105,000. There's 49,000.
How many homes are in Cuyahoga County?
I knew you'd ask me that. I don't know. I'm not sure.
Because I was just wondering the percentage. Is there 1 million homes? Well, if so, that's 10%. That's crazy.
Well, I
know the population is like 2.5 million in Cuyahoga, right? So 2.3.
Yeah. So it's. I guess the litmus test I did was in Franklin County, there were 45,000 delinquencies. In Hamilton County, Cincinnati, there were 29,000 delinquencies.
Wow.
So when I added up all the major cities in Ohio, it was like right around 300,000 delinquencies.
And a third of them are in Cuyahoga.
Yeah.
That's insane.
That is insane. And you can go in and look at some of these delinquencies and the property tax bills, and they're like, they've gone from like $4,000 to $10,000. And you're like, oh, that's a nice house. A $10,000 tax bill is probably a pretty nice home, but doesn't mean just because somebody has an expensive home doesn't mean they're rolling in cash. They could be strapped every month, right? So it's I think it's probably a problem that is going to require some type of government bailout at some point, unless the system drastically changes. So you ran this I just thought of this. You ran for Congress, right?
Yeah, twice. Yep.
Oh, okay. So
I lost, as you can see. I'm not a congressman.
That's okay. I'm curious, like when you went through that process, knowing that what's going on the inside and how you've kind of seen how the sausage is made. What do you think any of it, like the abolishment? Let's pretend the abolishment goes through on the voter end, and they're like, we're abolishing taxes, property taxes. Then they throw it to the legislation or the officials, however they want to say it, to figure out what happens then. Do you think it'll ever actually? They'll figure it out, or what? I don't
know. The sad truth, I say this knowing a lot of people in this. Look, there's a lot of great people in there, and they have well-meaning, and there are a couple really brilliant people in the Ohio legislature, really brilliant people. But for the rest of them, they don't have the competency to deal with this.
You're just saying they don't have the mindset to figure it out?
No, they're going to go with, so you're going to have, there's going to be two things. There's some real brilliant people. Let me say that. There's really brilliant people in there. But for the vast majority of the people that are sitting in those seats, they just don't have the ability to, just literally the ability to. And so there's two people they're going to listen to. That's going to be the lobbyists or the party. And so the party is going to make one that's politically, a case that's politically good for them. And that might not be good fiscally. That's not going to be good for maybe the overall communities, for Ohio, for business, for the markets, for whatever you care about. And then there's going to be the lobbyists, obviously. The real estate lobby is a very big lobby, by the way. So that's a huge one. And so those are going to be the people that are going to be making the legislations and making their case in there. So no, I don't think that the legislature is going to have be able to deal with an abolishment of income tax in a way that makes sense for everybody, because I just don't think they will be able to.
Yeah, that's my biggest fear. I point that out to folks all the time. I'm like, there's a million loopholes and ways to kick the can down the road where it could be passed and they go, yeah, but we got to figure out how to replace the revenue. And that may take us 2 to 5 to 10 years. Not really sure, because we already said it. The state of Ohio already deemed it was unconstitutional to collect property tax or to fund schools through property tax, I think is what it was. They've ignored it for, I don't know. I think that happened in like the 70s, I think, I think it was the late 70s. It happens.
Just look at the history of this conversation. It was the lottery that was supposed to fund school. It was the turnpike. After it was paid off, you weren't going to pay for fees anymore, but then there's still fees, and could pay for schools. The sin tax. There's the alcohol tax. There's there's weed. Oh, wait, we got to legalize weed so it could pay for the schools. Now what? Where's that money going? Like, how many times is the Ohio people are going to be bamboozled by a bunch of BS that isn't going to pan out? And so this is why it goes to and you don't hear it from the legislature. I literally have ran for, and I don't want to diss people, but I've literally have been on the campaign trail. But I think more people know this. It's like There are literal candidates out there running for office saying that they want to go represent you in Columbus and handle a $879 billion GDP of Ohio every year that does not know how to do their email, their phone, or use social media. Like, they're literally don't know how to do this, and they have interns deal with all that for them. I am absolutely serious with this. So like, like, they're not dealing with tax events. They're not dealing with like how to structure the system that is going to work for Ohio without very heavy outside influence.
Yeah. No, I think you have a good point, and I don't. It doesn't surprise me. It's just disheartening to hear from somebody on the inside, because I haven't interviewed any politicians at all about the property tax issue. I haven't, but it doesn't seem like, and I get a lot of comments that say, hey, if this person's elected, then they're going to save us. You know, they're gonna get rid of property tax. I've had people tell me
that must be a Vivek comment there.
If it usually is, right? It usually, and I'm like, yeah, he may glob on to whatever thing's popular at the end, but he's not going to lead. He's not going to. No. And the other thing is, you get somebody. They always say, oh, Ron down in Florida has already, he's already abolished them. I'm like, no, he hasn't. Right. You talk to any Floridan, they're still paying property tax, so that hasn't changed. It's I think a lot of people thought that Trump was going to remove property tax, but obviously he hasn't, because I'm still having to pay it. So, well, I guess when are you going to run again?
I don't know if I'm going to run again.
I know.
I probably piss some people off by saying that half of the legislature is stupid. But and honestly, that's probably why I don't win, is because I'm not political enough. But it's just the facts, man. And it's a sad thing that, like, we don't have this this robust conversation about these kind of issues. And what we started talking about Bitcoin, and one thing I really like about Bitcoin, and this has to do with democracy, this has to do with the conversation that we're having here, is one reason I think people should follow Bitcoin. It's not about the speculative asset. It's not about making money. It's not about whatever you think it is or whatever you hate about it or love about it. One aspect I think that is very beneficial is to understand what democracy looks like, because the modification of the Bitcoin network is a democratic process. And what we have is these things called Bitcoin Improvement Protocols, or BIPs or BIPs, that get proposed to different developers in the network, and the network has to vote on it to see if it's going to be added or not. And every time you do that, these are single issue topics. You don't have a Bitcoin Improvement Protocol that is 5,000 pages deep and has all kinds of different things in there. One Bitcoin improvement is going to be one thing, and it's going to do one thing. Those debates can last for 6 months just to say, hey, are we going to take a Bitcoin, storage from and I'm just going to use arbitrary numbers that aren't accurate, but say 10 kilobytes to 20 kilobytes or something like that, or bytes or bits, or how many, something simple like that. And that debate will rage on for months and months and months until it's voted on. And I wish that our legislature in Columbus, and as well as in DC, would get back to single issue debates of trying to figure out the nitty gritty of, like, the second, third, and fourth order effects of every policy that's out there on an individual basis, not in a collection of omnibus ideas. And if you follow Bitcoin and the way that that's handled, I think that you would have inspiration about how government can work and move responsibly, move slowly, have debate that is robust. And when the decision is made, understand that everything was exhausted until we came to a solution. For better or for worse, that's the solution. But you would never debate that the debate wasn't had and that we came in there half-cocked. So that's one thing I really do like about the Bitcoin space.
Yeah, it does seem very, lack of a better term, libertarian, like independent. Like and it ran like, maybe, like you said, a good example for how the government maybe wants to conduct themselves for the betterment of every, of the average person. This is one thing about Bitcoin that I really like, is that it's kind of off on its own. I think a lot of people feel like gold's like that too, or silver. That it's off on its own. It's not kind of tied up into any kind of goofiness that is manipulated by lobbyists or a tweet, right? Obviously Bitcoin value can be manipulated by a tweet or something from somebody, but it's it can move up and down. But at the core of it, though, it's pretty independent, right?
In a decentralized fashion, is very independent. When it comes to the price, it can be manipulated. But then again, what price can't be manipulated? Didn't Trump just crash the market because of 100% tariffs on China just like a month and a half ago?
I got wrecked.
Yeah,
I literally jumped on a live. I literally jumped on a live up. I won't say how much, but I was like, wow, like I'm having a great day. I got off my live and looked, and I was like, I thought my phone was broken. I was like, refresh. What in the world is this? What happened? And oh, he tweeted something. I was like, man,
so markets can move by anybody moving. Anybody can move markets by a tweet. Just depends on who it is.
Yeah. It's wow. This is a great conversation, Matt. I mean, I really enjoyed it. I learned a ton. I've got all kinds of ideas swimming around my head. Oh, I'm glad. And I don't know. I don't know how the housing nerds feel. I don't know everything about you, but just from my conversation, it seems like we need more people in the government like you. I would think, that want to have normal conversations. It's probably why you didn't win, because you're just having these conversations. It sounds like not a lot of people do.
I appreciate that, man. That's very nice of you to say. Maybe we'll try again in the future, but until then, we're going to sit here and listen to the housing nerd and figure out ways to release more assets so people can buy more houses.
Yeah, I really like that conversation. So let's do this again. And before we end, just let the viewers know best way to find you, the addresses again, and what you're and kind of what you're up to, or how to get a hold of you if they want to.
Yeah, you can. There's two. I have a daily podcast. We just do daily news. It's me and a couple guys. We have a Substack. Go to dailycryptonews.net. And you can just follow us there on our Substack, and we release podcasts. Just basically talk about the crypto market, the space, the news, the macro. I focus mostly on political and general and macro news, while other people in the space talk about trends and also like more the down into the tech. But we have a pretty robust team that does that every day. So I appreciate you following me there. If you want my political takes, you can follow me at The Angry Democrat. That's substack.com/@Matt Diemer. That's MattDiemer. And you can follow me there, The Angry Democrat, where you can get my political takes. And you can always send me an email at matt@dailycryptonews.net or matthew@diemerforcongress.com.
Awesome. That's great. We definitely have to do another one. I would love to hear more around, especially around this property tax thing. I think, around everything we talked about today. I just learned a lot, so we'll have to do it again.
All right, man. Thank you very much.
Thanks, Matt.